Hello everyone, welcome back. This is Twisted here from 𝗨𝗣𝗏𝗧, and for this part of the video, we will be looking at DXY and just purely from technical side of things, what the dollar index is doing. So basically, the same sort of analysis compared to what crypto analysis I do. I like to go to the higher time frame, so we start from the monthly time frame. And we just work our way down into the lower time frame and see what the drawn liquidity looks like for the upcoming weeks and months, and so on from there. So as soon as I get to the monthly time frame, first thing that my eye caught was this mitigation of this fair value gap, deep mitigation basically into the downside, almost 90% of that mitigation, and then price pushed up, closed above, and we have a bullish candle for the monthly time frame, and this is generating buy side liquidity to the upside on the monthly time frame. So I'd like to just zoom into this price action just so that we have a clear narrative. For us at this point, price is bullish, so we may expect a pullback for a continuation on the monthly time frame, but this is definitely looking like it is a pullback for a further higher low that will be put in. It can be around here, it can be around here, wherever it can be. So price may eventually do its thing, come down, or just further come down, mitigate, and then go up. So just keeping that in mind. This will be our first draw, that will be our second draw. So we can just mark that out as a second draw, and I'll just remove this. We can mark out this previous high as our second draw for initial drawn liquidity, push down to the monthly time frame. We have 19 hours and 15 minutes remaining to close this monthly candle. So I'm expecting some sort of bullish price action, and then we close around here, or if not, then we can obviously come and mitigate the 50% of the wick. But I'm hoping that this structure holds, and this structure holds, and we continue to the downside, because we do have inefficiencies that still sit underneath the swing point. So that's number one. That will be an inversion because it has been mitigated. So there's a high possibility price may just come back down, mitigate that, and just push away from there. So these will be in our discount zone, and these will be in a premium zone. The main one that I see here on the premium side of things, we have a 50% fair value gap in the premium zone, and price push down from there. And looking at the overall structure, nope, not that one, this one. There we go. Looking at structure, we do see 50% basically coming back into the discount, snapping back up, which means that we are in consolidation phase around here. So we do want to see some accumulation, but I'm not sure how long. But that's what our narrative is at this point for the monthly time frame. We are in a sideways price action. For monthly, we may see a sideways, and then we may continue to downside or impulse up, mitigate this, and come to downside, because this is all purely from technical side of things. Looking at the weekly time frame, working in a tandem with the monthly, this will be the first draw. This will be the second draw, which was mitigated on the monthly around here. A slight tap, not too much, but yep, and works out in confluence with the weekly time frame fair value gap as well. Further price action, we can after looking at further price action, we do see that there is a sweep or a raid on the sell side. Basically here price came down and then price pushed away, so this generally forms as a turtle soup in here. So that's something to be mindful of on the weekly time frame, which is forming within the monthly fair value gap. So that can hold some structure. So what we need to see here is that some bullish price action to the upside, impulsive close above this and this high to confirm that, yeah, we are bullish and the momentum may continue into the higher zone, mitigating this fair value gap, continuing into the higher side of higher range. So those will be the two important variables I would like to see in price. If we continue forward, we do have a healthy push starting from July, and now we are seeing a reversal candle, which means that Either this is continuation of the downtrend and price will just continue and fall from here, or price may just remove that, or price may just do a minor pullback and find some support, accumulate, and then push to the upside. But that is, again, with price action, we work with what we are given. One more thing we see here on the weekly time frame, we have a very minor fair value gap that is just formed around here, and we have a mitigation, and then we have a snap away from there. So something to be mindful of. Dropping down into the daily time frame, looking at the daily, what do we see here? This was our weekly, so we just move it to this side. So the weekly fair value gap becomes an inversion on the daily. Looking at just this price action, this will be our first draw. We can just mark that as DOL. First draw on liquidity, and also we do see that we have higher time frame relative equal highs that have been forming. We do see a slight sweep, and then we have a reaction, so that is healthy. I would like price to form something like a failure swing, respect this zone, and then impulse down, take these lows out. Once we have that, we can look for good short entries into the range, because what is this? This is the basically the balanced price range on a higher time frame. This was all inefficiencies on the sell side with volume imbalance gaps and fair value gaps, and price has just mitigated that, took out the highs, now put in a higher high from compared to here. Internal swing range, we still are in a bigger swing, so there's a very high chance of this area to be respected, and we can see a further deep push down. This was the weekly, so I might just pull this back in a little bit. There we go. Oh, there it is. And much better. On the higher time frame, weekly 50 forms around where? Forms around a breaker. So we do have, and then what do we also have here? We do have inducement just lined up right above. So these areas become high confluence zones, and then on the daily time frame, we do have a fair value gap. So we may see a mitigation of that fair value gap, continuation to the downside, and the continuation will get confirmed or high probability if we start to see a decent push down from here. Break and close, basically. Dropping down into the 4-hourly time frame, just looking at the push down, what do we see? Lows taken, lows swept, forming what? Relative equal lows, or basically equal lows around here from this point to this point. That's equal lows, and then right around this order block, fair value gap, equal lows. So this is generating liquidity, and we do have a fair value gap on the 4-hour time frame that works in confluence with the daily. So this becomes a high confluence area. We do have an impulsive price action to the downside. Also here we see, there we go. So we do see a push down from here, so we may expect some bearish price action going down from here, or we may see something like this, or we may see something like this. But definitely these areas will get mitigated, and these areas will become our intermediate term drawn liquidity on the 4-hourly time frame. So that is my outlook on DXY based on just technical perspective. So hope you guys enjoyed it, and until next time, take care and happy trading.